Hi everyone, welcome to our ongoing Attract Capital webinar series, and I am here with Dave Barnett, the CEO of Attract Capital.
Hi everybody.
So our topic today is how to know if your deal is financeable. So Dave, what are the keys to financeability? What are the major things people should know?
They need to know deal size is probably the number one. How big your deal is relative to the lenders that you're looking to bring it to. Along with the deal size, the company revenue and the EBITDA is also an important screening factor for the lenders. So those are things that you need to know where the lenders are on all those different criteria. Also the industry. Not every industry is acceptable to a lender. Most of them are, as they say, industry agnostic, but you need to know some of them won't do retail and some of them won't do gambling, some of them won't do commodities, so you need to know that. And then finally, how risky the loan is perceived as, the debt multiple as well as the loan to value ratio. So those are the things that you need to know, Sarah.
Okay, so it sounds like the biggest thing is like how big or small the deal is and how much money is actually there. So if a company's like, it's a great company, great product, they have a great debt multiple, but it's small, so they're only looking for like, it'll be $2.5 million and their revenue might be like $3 million. It's kind of smaller. What about that situation?
Those companies are very hard to work with because there's a lot of them out there, but institutional lenders that focus on middle market size deals, they only want to look at companies that have about 10 million in revenue and 2 million of EBITDA. So regardless of how great the company is, if it only has 3.5 million in revenue, it's generally going to be too small. There's a few lenders that focus on that size, but it's not very deep. So it's better to have a company that has at least 10 million in revenue and 2 million in EBITDA.
And the smaller companies, like it would be a different type of small business financing.
Correct. It's more like, at that point, it's like SME, small, medium enterprise size, and then middle market usually starts at 10 million of revenue and 2 million. And also, they look at it in terms of the ticket size of the loan. So the ticket size of the loan for the middle market generally starts at about 5 to 8 million, but it keeps going up all the time. When I first got started in the mezzanine lending business almost 30 years ago, you could do a deal with 5 million in revenue and 1 million of EBITDA, but the funds keep getting bigger, so the sizes keep going up.
Yep. Right, that really makes sense. So I think we have a good understanding of like where the deal size, the sweet spot for deal size, but I don't think that's like the only important thing. So what else is important?
Okay, so lenders want to know what level of quality your financial statements are. Are they audited or are they reviewed? That's very important. They also want to know your historical financial performance. Has it been volatile? Has it been up and down? Most people struggle during the pandemic.
Yeah.
How do you show your adjustments from the pandemic year? So the quality of the financial reporting and the stability of the financial performance are very important. They also want to see that you have a good quality management team, how broad the team is, how qualified and how experienced the management team is. They also want to know the revenue model of the company. How do you make your money? Do you have 5 big projects where all of your revenue is contributed from, or do you have like 1,000 little transactions where your revenue is contributed from? The latter is much less risky for the lender.
Sure.
And then they also, what else is important is you want to talk to a seasoned financial advisor who's been in the market, who can kind of tell you how a lender will look at it based upon their understanding of all the sorting filters that the lenders have, because it's a pretty big ecosystem, the middle market.
So it's good that opinion might like seal the deal for the financer.
It'll push them in the right direction.
Okay.
So like if somebody gives me a call and says, I have this deal, I can say to you, you should look in this. There's 4 different lending markets in the middle market that you can look in, and I can tell you the 3 that you probably don't want to look in, but the 1 that you can look in.
Okay, so we talked about deal size and a couple of other things that are important to get somebody to work with you, but I think it's also important to know like what will make lenders not want to work with you. So like what'll turn them off to your business?
Okay, so if they're in a turnaround mode, or if they have too much customer concentration, or if they recently lost a big contract, those are real turnoffs. And if you don't have good quality financial statements, if you're using QuickBooks and you don't even have reviewed financials, that's a real turnoff. So they tend to look for those things. Those are the easiest things for them discern to reject something just outrightly. But so it's important to know that before you go through the process of investing into your financing, and you get down the road and somebody says you have really bad financials, you have a really bad turnaround here.
These will help them screen it out earlier.
Exactly.
Okay, cool. Well, I think we've covered all of our bases. So if you're a sponsor with a deal, you now know some of the keys to financeability, and as always, Attract Capital can help you with that. So thanks for being here, and be sure to tune in to our next webinar.
Thanks, everybody.
Have a good one.